50 basis point rate hike. The first time we've had such a rate hike in Canada after a gap of almost 22 years. While on one side it was an acceptance that the Bank of Canada is behind the curve, it was also an acknowledgement that the bank is serious about fighting inflation and bringing it back to its targeted band of 1 to 3%. Greetings viewers, you're watching Aman Sanga, independent financial advisor in Mississauga, Ontario. Inflation and rate hikes have been a story of 2022, and it was no different for the month of April. So for the update for the month of April, we'll start with the year-to-date index returns. We'll look at the inflation numbers, and then we'll go back to a topic I initiated last update, which is, does this indicate that a recession is imminent? So let's get started with the numbers, the asset returns, the major index asset returns. And if you can look at it, whether it was bonds or it was equities, there is a lot of red. TSX, which was in a good position at this point last month, has given up those returns. So it's basically flat and everything else is red. I don't want to spend more time on it, except that the way you could look at the positive news or the positive outcome from these numbers is that the worst might be over for bonds. And then rightly now when the rates reset at the higher levels, you could look at more meaningful contributions from coupons towards the retirement income portfolios going forward. Now with that, let's move to the inflation number. Now when I shared this number chart for last update, this number was 5.7%. Now this has gone up to 6.6. Now this is again end of March. And what you can see is not only is the absolute number rising, the contributors to that number, which is these individual candlesticks, each of them is also increasing in size. And what that implies is that the numbers are increasing not because of a particular sector, let's say transport, just because it's becoming much more widespread than what it was initially perceived to be. And this is kind of collaborated by this a number or this chart, where you see we had seen this, the prices of the goods shoot up, and that was being mainly attributed to the rise of the disruption in supply chains. But what we are seeing now is that the services are also shooting up, and main contributor would be the wage inflation. So this is becoming a much serious problem and would be the focus of central bankers. And the implication was that we saw the first rate hike from Bank of Canada, 50 basis points, April of 2022. And this is just the start of the story. It looks like we're going to have, just based on what the markets are pricing in, another hike in June and July, and probably till the end of the year, we might end up at 2.5%, 3% when all this is said and done. On the same note, if we go south of the border, there is a rate announcement expected middle of this coming week. Where we expect the Fed to kind of follow the same trend that we've seen from Bank of Canada. Now with rising rates, what does that mean? Like we see the cost of borrowing going up, does that mean the recession is imminent? And I had shared this indicator, I have shared it previously, and this is the 10-year, 3-month yield curve. Which has been the most reliable indicator. Anytime it has turned negative, it has been followed by a period of recession, which is the brown sticks on this graph. And what you can see is so far, this is the number end of April, it's still positive. And so you have to look at this with a pinch of salt. Now, this being positive, and when you look at the numbers for US GDP, which was a big surprise that we had in contraction for Q1 2022 in US GDP. And when you look at what contributed to that contraction, you can see a lot of it was to do with the shrinkage in exports. But what I took positive from this chart is that the consumer spending as well as the business investment, which are contributors toward the GDP growth, they are still positive, they're still growing. I just want to stop here and say that if you are a long-term investor, there might be a recession, might not be a recession, nobody knows. But if you look at where the prices are, equity prices, bond prices, there has been a significant drop in prices. And not to say that there could be no more further price drops, but if you look at it from your portfolio perspective, if you're looking to initiate a position or you're looking to dollar cost average down the cost basis of your portfolio, these are good times to initiate this or make those portfolio changes. And the number to call is 905-363-5035. Thank you so much for watching, and bye for now.